So this week has not been the best trading week, right? In regards to the futures market and, the forex market, which are traditional markets. This is, normal price action. This is what you should, usually expect at the end of the month, right? So, and that's very time specific. So at the end of, each, cycle, doesn't matter if it's the daily cycle, the weekly cycle, the monthly cycle, or even the yearly cycle, right? You'll usually get price action like this. Usually, right? The last quarter, if it does not, reverse, and the only way, or one of the ways that would cause one of the things that would cause price to reverse would be sequential SMT, right? Or a precision swing point. You understand? So going into this week, right? I'll go for the NASDAQ, right? Going into this week, I'm pretty sure that you guys remembered, right? That we talked about this specific candle right here. And I know that, price hasn't, fell, that much, but, it's the last week. So we don't expect price to be reacting, perfectly as how it would like in the second and the third week of the month. So we will compare, right? And identify our precision swing points. If you guys can recall, right, on Sunday, right, I said that, this candle right here that was formed on Friday of last week, right, the daily candle of last week, Friday, it's very important, right? This is a precision swing point. A precision swing point, right? And if you're a charter student and you're here, you know that. You've never heard about this before. Michael doesn't talk about this. I don't even know if he knows about this, right? This is, my specific research. If I go on Twitter right now and I talk about, just say, what's up, what is this, what is the importance of, the candle of last week's Friday? No one will know, right? In order to take anything away from this, you must understand that you must always be looking at, correlated assets. So you can't just be looking at the S&P 500 alone. And I know that for some of you, this may, come off as difficult. But I can assure you that, over time it will get easier, right? You will begin to take it as a habit, right? You need to develop these habits, and these are good habits, right? So we did expect, price to, fall a bit due to the fact that this is a precision swing point. There are times when, specific times, which we will get to eventually, right, that precision swing points, you don't need SMT. You don't need SMT, to see precision swing points, functioning as they should. So there will be times, such as this right now, right, where there is no SMT, but there's a precision swing point. But whenever you see sequential SMT, right, whenever you see sequential SMT, write this down, and there is a precision swing point, there is nothing, right, that is, more powerful than that. Especially if that swing point formed on a new week opening gap, or a new week, or a new day opening gap, right? You understand? And also, just that I put this in right now, just as you have new week opening gaps, new day opening gaps. You have new month opening gaps, right? Remember, everything is fractal. Every single thing is fractal, right? And I know that, this lecture right now, it's coming off as, a bit boring, I would say, but these things are important, right? So most of you guys know that my forte is futures, right? I'm the best, at futures, right? That's what I'm good at, right? I'm good at futures, trading futures, knowing, when price is going to reverse, right? And everything that I talk about, it works with futures, right? It works with Forex. It works with crypto, but not as good, right? As you will find it working in the Forex market and the futures market. Of course, it works with commodities too, right? But the thing is, you need to have three, right? If you're looking at futures, you need three assets, right? If you're looking at the Forex market, you need to use three as well. And you can find three assets there. There are some, asset classes, whereas like crypto, you can use Bitcoin and Ethereum, right? You can use two there. But here, right, it's better to use three. So whenever you can find a asset class where you can find three closely correlated assets, that asset class will be higher probability than any other, right? Same thing for bonds. If you're trading the 30-year T-bond, right, which is, if you're trading the 30-year T-bond, then you need the 10-year note, right? And you can use the 5-year note as well. And it will, function the same way here. So going back into this, we will identify our precision swing point. So this candle right here, that's a precision swing point, right? You can see that this candle was up closed, and the important thing that you must, take into consideration is the time that this candle forms, which was Friday, right? The 23rd of Friday, which was last Friday. Over here, this was the other one, right? Like, trust me, like, if you're trading, right? There are times when you'll be trading and then you see the price take out a specific low. Take out a specific low, and then you'll see a precision swing point form, right? And then a fair value gap forms after that. That would be a time where you could enter your trades, right? Now over here, we can see that this is a precision swing point as well. So there was no SMT here, right? So this is why, right, we had price, drop a bit, right? And we have this low left, and I'm not sure if price will go below this low tomorrow, right? Not sure. And currently, what else can you see right here? Because like this is very, choppy price action, right? You can see, like, I'll show you again. So right here, on this candle, you can see that this is a precision swing point as well at the moment, right? And below these specific swing points and above them, there's a lot of liquidity. So if price was to run below one of these lows, right? And I will, as you guys can see, we're not like right now, not teaching with hindsight data, we're using, forward price action. We're not looking back at old stuff. We're actually trying to implement it right now. So here, you guys can see, right? Do you guys remember, right, the trick that I taught you guys with the fibs? Here, we'll use it right here again. So we have this low right here, and this high right here. We have price below the 0.5 level, right? And this was the low of yesterday. Well, here right now, right? And you have to anchor the fibs, right, at the specific times. Look at this. Right here, you can see that we have price below, right? So this is already SMT. But here, right, we have price trading currently above the 50 percentile. So this right now is a way to spot low probability price action, right? Over time, you will not need to use your fibs, right? Over time, you will not need to put any marks on your chart at all, right? Sorry about the pause. Just drank some water. So whenever you have three, right? Right now we're seeing three of these asset classes that are close related out of sync. So the S&P 500, the NASDAQ, and the E, right? And the E-mini Dow, right? Futures, out of sync. They're all out of sync right now. So currently we need to see them get back, right? Into sync. We need to see them, we need to see at least two, moving in the same way. Right now we have this one above, right, the 50% of this range from high to low. And remember that anytime we're doing this, we have to be using the same points, the same swing points to anchor our fibs. We have SMT here between these. But due to the fact that, right, price is out of sync, this is not high probability SMT. And also, this is not sequential SMT, which makes it even lower probability. You'll come back, to this over some time if you don't understand, and then you'll probably get it then. If you don't understand, just rewatch this. But it's pretty simple, right? We have three, right? Looking at them, visually looking at them, you can see that three of them, they look different, right? This is above the 50% of this range. This is below the 50% of this range, but it didn't take this low. But this one, the Dow took this low out, which is, basic, shenanigans that happen at the end of each month. So what we would like to see right now is, stabilization of price, which would be, price consolidating, then forming actual sequential SMT. Currently, we have liquidity above these highs right here. There's a lot of liquidity above these highs, right? So even if price takes this low out, right, and leave this one, that would be, and cause his sequential SMT, then, we could look for something to do then. Here, remember this, right? So here, this right here, which caused price to drop. What caused price to drop right here? Sequential SMT. If you guys notice, the only time I really talk about SMT is when it's sequential, right? So this high right here, when did it happen? During Let me get this here. This happened, this high formed at Q3, right? 7 o'clock in the morning. And this high formed in the afternoon session, right? So this was SMT between Q3 and Q4, which is what triggered this falling price. So right here, you can see that we did not have a higher time frame level for price to key off of. We didn't, right? Nothing that's clear. And we really want to see, clear distinguished gaps. But due to the fact that this was sequential, that was, enough, to take price down to these levels to take this low out, which is what happened today. We'll be keeping our eyes on these highs, right? These highs. Very choppy, undistinguished price action at the moment. But I just can't imagine not seeing these highs being taken out. There was a lot of things, that I talked about in the first half of this video. So you'll probably, need to rewatch it. Because not all of you really understood everything that I said. And as you guys can see right here, we had, what again? This was sequential SMT. So this model, right, is one of, my favorites. One of, the best that I actually have. So we had SMT here, right? So this is for all, everyone, right? This is how we use it. And there is, I'll talk about something else, that's, pretty new right now, but remember, this is how we use it. So remember, look at this. This candle right here, this specific candle right here, right? If you look at the euro, it's an up close candle at 3 a.m. If you look at the Great British Pound, it's a down closed candle. Right after there is sequential SMT. Right? So we had price take out Monday's high on Tuesday in the euro dollar, right? But, and some of you guys remember that, I even outlined this before, so you can remember, right? And price pretty much did what we expected. Then on this candle right here, for the Great British Pound, price failed to get this high out. But what really, stood out to me was this swing high right here. I did not expect price to go back above this swing high. And due to the fact that this failed to take this high out, I expected, this to fall more. Right? So here, and we'll go into some more details. It's just so, and it's still so early. Don't want to give too much stuff out. So right here, right, this wick. Focus on this wick for a minute. This is a specific wick. Right? So this wick right here, remember, wicks are gaps. But when do wicks really function, as gaps? Because we've heard Michael say wicks are gaps. And everyone says wicks are gaps. But when do you use wicks as how, you use gaps. Here, this is one of the ways, right? So right here, you can see this wick, but this is not a normal wick, right? This is the wick, right, of the precision swing point. Do you see this right now? Do you see why my entry was here when I posted my entry? Do you understand? And you need to understand that this is low probability price action. So let's go over this again, right? And here is another precision swing point here as well. So let's go over this one more time. We talked about this, when price was literally here. I said focus here on this Okay, my audio just cut out. Is it fine now? No idea what happened. Oh my gosh. Hold on. Is the video gone too? Can you guys see my screen? That's insane. What the hell? Oh. Can you see the screen? I don't think you can. But the audio is good. What just happened? I literally have like fastest Wi-Fi. That's what happened. Oh my gosh, that's insane. Are you telling me that was not recorded? No, you're joking. Let me check. Bro. That's insane, bro. Like, honestly, man, that's insane. Hey, 1 second. Wow. Maybe it's still recording. Hopefully it is. So what I might have to do is actually edit out this part right now. Okay, you see this. Okay, hopefully it's still recording. So maybe I just have to. It's still recording. Okay, good. I just have to reshare my screen. That's insane. Oh, there we are. That's insane, man. So yeah, we'll continue where we left that, but my thing just crashed just now. Insane. So where were we? And after this, then yeah, we'll probably have a little talk about something else. So the wick of the precision swing point, right? If it's a bullish precision swing point, which is what this is. But for a bullish precision swing point to form, right, it does not have to be specifically up, closed, or down, closed, right? It just has to be a swing low for it to be a bullish precision swing point. And the same goes for the bearish precision swing points. So the wicks will be very, reactive to price. So, for example, right here, when price shifted market structure, look at this, right? When price shifted market structure here, and price did not leave a gap right here, right? No, there was not just as though there's a fair value gap here. You can see my mouse, right? There's a fair value gap here. There was not one here. So price needed to find a inefficiency, right? And that's where this came in, right? So, for example, when price traded into this gap and traded down and came back into this gap right here, this gap was already tapped into, right? Or, balanced. So when a swing point formed here and then it created a gap, right? Price went into it, and filled the gap, then continued to the downside. Here, right? And remember, this usually happens in, choppy conditions, right? So when we have a precision swing point here and no gap for price to fill, it will fill this, which is the wick. So you can see price went up into the wick, then fell. So this right here would be one of those entries, that will probably give you, realistically speaking, a good return for your risk, right? If price trades into this wick, that's a precision swing point after their sequential SMT. You short here, put your stop here, above, right? So your stop would be here. Remember, we talked about this before. This is in hindsight, right? So I remember, right, entering here, and which I did post my executions as well, right? Anyways, when I entered here, around here, my stop went here. To someone that's, outside of us, this wouldn't make any sense. Why are you entering here? It doesn't make any sense. Because they don't understand sequential SMT. And they don't know what a precision swing point is. Right? And the hourly chart, right? So the hourly chart is specific for the weekly cycle. Right? It's specific for the weekly cycle. So if you were, to do something like this, which, is what usually happens in what I would say, a low probability, condition or choppy market, you would be using the 5-minute time frame if you're looking at the 90-minute cycle, right? Okay. So after this wick, gets filled, and if you see a swing point form within this wick, the next fair value gap, right? So the next fair value gap that forms, that would be your low risk entry, right? You can, do this if you wish, but like just after you back tested enough and you've, demo traded enough, because you don't want to just be jumping in this with real money, right? And once you see it happening enough, then you can go for this, whenever we're in low probability condition. But if you see this happen, right, you are almost sure, because you're never going to be 100% sure, right? You're almost sure, right? What will make you almost sure? The sequential SMT, right? Which also you can see here, right? Sequential SMT right here between the US dollar and GU. symmetrical price action between DXY and the euro. So even within, this slop, there is something to do, right? So price trading to the gap after there was a swing high form within this wick. And this wick is important. Why? This is the wick of the precision swing point. And afterwards, price fell, right? Taking out our target that was here. This low right here was our target. Then we rallied back up, right? Personally, me after this week, after taking this, and taking profits around here, I was pretty much, done, for the week already. I like taking at least 2 trades per week because I have so much things to do. I have to be planning these lessons, right? And, in order of, what will be better understandable to you guys since you're not, as versed in this as I am, well, because I'm the one that actually, not to be cocky or anything, but like found these things. No one talks about precision swing points. No one, ever talked about a precision level, right? And right here, also, right? So we're going to, talk about precision levels as well, right? So the true open for the week would have been this candle right here. Right? So this candle right here, opening price here, this would be the true open of the week. So as you guys can see, everything, right? All of the entries occurred above the true open of the week. Then again, we can go even deeper, right? This was the true day open. So now you can see, why I was actually interested in Euro USD, even though it was so sloppy, right? So this right here, this was the true day open. This was a true week open. I like doing this, right? I like giving you guys the chart beforehand and then talking about it afterwards. So like I will specifically look for something that I am planning to talk about on Wednesday. Then I'll give you the chart beforehand and then afterwards I'll explain the movement of, price. So true open, true week open. These are stacked. Remember what we talked about stacked true opens? Remember that? Yes. So the high of this candle right here, right? The high of this precision swing point, between that high and the true day open, or even the true week open, right? But due to the fact that this is, stacked true opens, true day open over the true week open, this right here, right, would be our precision level. So from this candle to here, let me change the color. This would be our precision level, right? Do you see? So meanwhile, this was the true day open. You saw price trading here. Once it broke down and returned to this gap, which is above the 50% of the precision level, right? You could go short here. But even, when price broke down here and went back to the precision level again here, right? You could short here as well and put your stop about here or here. Because both of these, are good places to place your stop losses. And again, this is not hindsight. If like someone outside was saying this, they'll be like, "Oh, it's hindsight. You couldn't have any idea of what price would be doing in this condition." And just imagine, like, what you can do when the market gets clean. Because guess what? This isn't even clean price action, but we're implementing everything, that we've talked about so far, which is still elementary. Still elementary, right? So the true day open, right, stacked above the true week open. Look, this is where you will have, a setup that's just too good, to fail, right? So we have the true week open, then above that, the true day open. So whenever you see, a lower time frame cycle's true open form above or below the higher time frame cycle's true open, right? You start paying attention. Like even worse when they form this close in proximity, right? When they form this close in proximity, right? And you have a high very close to the true day open, and then you have SMT. This is when, right? You'll have Tuesday most times than not, right? This happens on Tuesdays more times than not. When? During Q2, the London session. So whenever you see this type of price action, right, you'll usually have London making the high of the day. Right? You understand that? Good. So let's go over this again. Everything that, most things that you see here, you learned here. This is a precision level. And this is not a higher time frame level, right? This is just the high of the precision swing point. So the higher the precision swing point, between the true day open and the high of that, right? That gives us a level which would be invisible to everyone else. Here is where we would like to, enter our trades. And, during the course of the year, we'll see cleaner setups than this. But I think that it's good right now, to be looking at, these eyesore of setups, nasty price action. Because whenever we see the real clean price action, right, it will be beautiful. But, due to the fact that we're at all-time highs right now in regard to the futures market, and we aren't using any, higher time frame levels here. There are no higher time frame levels here to use, right? None. There's no higher time frame levels here. We're just on the 1 hour time frame. We're not looking at the daily. We're just using this. They're just using time. The aspects of time here, the true opens, sequential SMT, the precision swing points. It's time. That's aspects of time right there, right? Then we have a precision level, which is time and price, overlapping to show us a specific level. So a precision swing point, right? I'll say this, one more time. A precision swing point occurs when you have two or more closely related asset classes, right? And at a specific time, right, that specific candle must be closing in the opposite direction if it is positively correlated to the other asset. And it should be closing in the same direction if it is negatively correlated to an asset, right? So right here, we can see that this is positively, right, correlated swing point closures, right? So here we have price closing down. Here we have price closing down, right? The cracking correlation happened between DXY and GU and between EU and GU, right? So GU is what caused, or what tipped us off of, this possible reversal that happened here. And remember this. We have nothing else here that we're using. Like everyone else, right? They're currently saying stay out of price. You don't want to be trading this price action. This price action is hard. You can't know what price is going to do with this price action. That's exactly what they're saying, right? Because they don't know things like this, right? So if you were, first of all, beforehand, you notice, because remember my entry was here in this wick, right? You can enter here in this wick, right here, stop here, price falls. You could even like exit here and be okay. Done. Or price goes back into this gap right here while touching the precision level, trading above the truly open. Then you short. Boom. So I hope that you took, something valuable from today. We introduced new things and we showed you different ways to use different things, right? And we showed you different ways how to use the things that we've talked about before. I believe that over the course of, the next month, we'll be working on getting this close to, almost perfection, I would say. So like what I would call that is for you to, be using this and have specific rules, right? So every time we talk, I'm always most times repeating, things that I've said before to instill that mentality into you, right? I need you to know that there is only, one way to approach this certain concept. This is how you should use it, right? Whenever you have gaps overlapping with a precision level, it's a high probability, right? Due to the fact that we had this precision level, right, covering the top half of this bearish fair value gap, right? We expected price to fill it. So price filled it, fell, right? After price filled this gap, what happened? There is another gap that formed and it wasn't filled. Why? Because price already filled this one, so the next gap would be a breakaway gap. So yeah, I'll talk to you guys Sunday. I think I want to talk to you guys Saturday as well. I think I do want to talk to you guys Saturday as well. And I want to update you guys tomorrow, right? Because I think that tomorrow will be a good day. I'm hoping that it will be a good day, right? So if we see our setup form, right, the things that we're looking for, sequential SMT, precision swing point, right? Price revolving, around our true opens as we would like it to. Then, we'll take action. So until then, have a wonderful night.